Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 9th, 2022. Hope you're all doing well. In today's segment, we'll take a look at Tesla. Look, Tesla is a great stock led by Elon Musk. He's a great innovator. But off late, Tesla is down, as you can see here, trending down nicely in a daily chart. This is mainly because Elon Musk is distracted with Twitter. I'm sure he'll snap out of it pretty soon, but at the present moment he's distracted with Twitter. That's why Tesla shares are coming down, as you can see here. On the positive side, look, today Tesla share went higher slightly. Looks like there is some positive momentum. We'll see if this continues. As you can see here, Tesla is below its 200-day moving average. It's below its 50-day moving average, and it's trying to take on its 20-day moving average, as you can see here. Not quite, and price is at 179, as you can see here. As you look at its weekly chart here, look, we got the weekly chart here from Finviz. Look, it's at its 200-week moving average here. It's trying to bounce off of these levels here. I think this can this level can act as a very good support level here. At this point, I'm a little bit bullish on Tesla, given it's down big time and it's trying to bounce off of its 200-week moving average here. I think there's a chance that this can act as a very good support level for Tesla. And look, from a fundamental perspective, Tesla is a great stock. Even up here, it's doing very good from a earnings per share perspective. Look, it's up nicely from 2020 to 2021, and sales is doing well. Look, they're bringing in the big revenue. That's always great. Shares outstanding is not, it's pretty constant, not too much. So I think it's manageable. And look, November 23rd, there's an upgrade from Citigroup here, from sell to neutral. And look, the price point was 176, is above 176 right now. And as you scan through here, there are big news items here. Looks like Twitter is selling its office equipment. No big deal here. And as you can scan through here from a insider perspective, look, insiders are selling Tesla. We got few folks here, and looks like they sold some, not a big value here, about 1.3 million shares here, or dollars worth shares here, December 6th. And main one was Elon Musk. While ago he kept on selling. CEO Elon Musk, look, he'd been selling a while ago, and he sold quite a bit of Tesla stock. Look, 2 billion, 1 billion, and so on and so forth. So that's why it's kind of dragging the company down along with the Twitter saga. And now let's look at action here, options action, and see what options market is telling us. So I will take you to my favorite options website here, which is tradeetics.com here. Look, we got tradeetics.com, and it gives you a nice summary. Look, it tells you the market cap here, and you got the stock price, as you can see here, PE ratio, revenue, and so on and so forth. If you're a fundamental type person here, you can click on more statistics here. They will give you some more statistics here, like how much cash they have, the current debt, revenue per share, and so on and so forth. All good information here. And you can also see the shares shorted, and so on and so forth. All good fundamental type information here. So what we'll do is we'll close this here and go into a little more detail. All right, let's look at this chart here. This is one of my favorite chart when it comes to this tradeetics.com. Here in this chart, I'm basically showing both the dark pool levels. Look, we got dark pool levels here. We got 194. Look at $32 million dark pool bid here, and $61 million again bid here. That tells you there is a lot of resistance at about 194 level and even 191 level. This can be a very good resistance level here. These levels will not let Tesla go above these levels unless Elon Musk does something very spectacular. But these are very strong resistance levels, as you can see here. And then you got some good dark pool buy activities. Look, we got 173 and 64, and stock price is still below these levels here. I think these can pull the stock toward these levels here. That's why we can go into 182, 185 level with this big positive dark pool activity, but not so fast, mainly because there's a huge negative dark pool activity here, 378.89 million here. That's a huge dark pool activity. Even this support level positive dark pool is nowhere close to this huge negative dark pool. That's why this 177 level here, this is probably is a very big magnet. This can pull stock towards the 177 level. Given there is a very high dark pool bid here, folks are really these folks might have bought or sold Tesla share at these levels here, expecting Tesla will even go lower. But look, there are three big gamma exposure levels here. You got a gamma exposure level at around say 172 or so. That's a big level here. And look at 167. There's a big level here. These two gamma exposure levels can act as a magnet and pull the stock toward these levels here. That's why right now I see Tesla stock coming down from 179 level into 170 and 167. These are the very strong magnets here. They will pull Tesla toward these levels here. That's why if you are a stock trader, watch out. Around these levels, it's good to buy the stock if you don't have the stock, or if you're an options trader, it's safe to either sell some put spreads or put options below say 165, around 165 level. You could sell some put options or sell some put spreads underneath. That's a good way to make some money. And if you're you can also sell some call spread here around say 185, because these levels here 185, 190, you can sell some call spread and make some money, because look, we got very high dark pool activity. You could even look at higher levels here. You could sell some put spread at say 190 and 185 and make some money that way also. That's why Tesla, because there's a very big magnet or a delta exposure at around the 170 level here, that's why stock is going to be moving very slowly. We'll go into a little more details why stock will be moving very slowly, but look, stock is going to move very slowly. And if you're an aggressive options trader, you could sell some strangles here. So it's going to be range bound, between say 190 here and 170. I think around these levels, the stock will move up and down. So if you're a options trader, you could sell some short strangle here and make some money that way also. All right, so that's about Tesla stock chart here. What we'll do is we'll look at a few more things very quickly. Look from a seasonality perspective. Look, December is a hard month for Tesla. Look, December it did not do much, but January seems to be pretty okay here. If you have some patience here, if you can sit through this difficult December, January could be a good month. But don't hold the stock longer, because February is going to be a bad month again for Tesla, and March and April are so not great. But June is a great month for Tesla seasonally. That's why you got to be looking at this monthly seasonality and trade Tesla accordingly. Looks like June and January are great months. Even October or November is okay. But watch out for February and watch out for December, and even October is not a great month for Tesla here. So trade according to seasonality, so that way you can make some money with Tesla. All right, so as you go through here, now what we'll do is we'll look at some short interest. Look what's going on here from a short interest. Short sale volumes are creeping up here on Tesla. Looks like folks are shorting. This could even be market makers. We'll look at some of those details here. So with that overall, you can understand what's going on here. So there is a lot of short interest going on here. There is the dark pool activity. So stock is really range bound at these levels. All right, so let's look at options dashboard. This is one of my favorite dashboard in tradytics.com here, and I can go in here and change the time frame to maybe say 15 minutes or even 30 minutes. It will give us a couple of days to look at. So 30 minutes is one of my favorite time frame for swing trading, and 15 minutes also great. Look what's going on here. What's going on here? We got stock chart here. Stock is about 179 or so. As you can see here, this is the price tag here, about 179. And look, from a algo flow perspective, we got a blue line here that tells you positive premium, but right now we got negative premium, which is a red line here. So that's why right now it's clearly in the negative trend. And now we look at little more detail here. As you scan through, we got daily premium heat map here. Look, at about this weekend, we got some positive premium levels at 175 and also 177. As you can see here, I think these folks will be making some money here. But look, as you go into this is the call, this is the daily premiums, and if you look at the weekly premiums here, if you scan through this here, mostly negative premium here. So overall, from a premium level perspective, looks like we got some negative weekly premium at 12.9, as you can see here. And even if you look at 12.16 here, which is a week after next Friday expiration, look, we got some negative activity here, negative premium, as you can see here. So it's mostly negative amount overweighs here. That's why Tesla will undergo some some tight trading range type move here. All right, so next is this net flow activity. This is one of my favorite. Looks like off rate there is the call volume is slightly going higher. Looks like there is a momentum in the call volume. It's a great sign. It's good to look at how the call volume is trading, and looks like put volume is also going higher, and stock came down, now trying to go higher. You could also change the history and look at maybe 7-day history here, or 5 days good enough, and see the trending. Look, from a trending perspective, still look at the put volume here. Sorry, put the put perspective, the negative flow is higher, the positive flow, which is call flow here, call is also going higher, but it's not anywhere close to the put, as you can see here. That's why right now it's squarely in the bearish territory. And if you look at the historical net premium here, you can see here 12.7. We got a big red here that tells you there is a lot of negative premium here. This might indicate folks are buying put options or selling the call options. All right, now let's look at put call volume. Look, there is some positiveness here off late. As you can see here, the call volume is overtaking the put volume slightly. That's a good sign. And overall, call versus put open interest, this is the contracts held by traders. Looks like the put volume is higher, sorry, call volume is higher than the put volume. That's a good sign here. And we got some heat map here. You can just quickly scan through. Overall, as you scan through here for 12.10 here, overall heat map perspective, we are squarely in the negative up to 177 here. There is some positive amounts as you go into 180 and so on and so forth. All right, that's not a big deal, but this is a very good chart to look at from open interest perspective. Look, there is some very heavy open interest at even higher prices, as you can see here at 202. We got some high open interest here. Look, even at the lower prices, as you can see here, there are some high put options here. Look, we got red here, high put open interest here at 149 and even 157 and 160. There is some big put open interest here. Next, what we can look at is really this one. This is very important. If you're not looked at the dealer Greek buildup, this is a very good tool within the tradytics.com. I recommend you to watch this. I watch this every day, especially the stocks I will be trading, because it tells you how the stock market is going to move. Anytime you see a positive delta buildup at the dealer or market maker, watch out. This indicates dealer has got positive delta. The way to think about this positive delta is think as if dealer has got some call options. The moment a dealer has a call option, it will equate to a positive delta. The moment dealer has a positive delta, dealer is directionally neutral. They have to basically short the stock, so that way they are directionally neutral. They got positive delta, think they got call option. To neutralize this positive delta, they will basically sell short. They will basically short the stock. The moment they short the stock, because stock market Tesla is coming down here, Tesla will even come further down. As Tesla comes down, basically these market makers or dealers, they will cover again. They will buy at a lower price. So that's why the moment you see this positive delta here, because there is a constant hedging going on by market maker, they will basically short the stock, and as the stock goes lower, they will cover it again. As the stock goes higher, they will short again. That's why this ping pong effect will go on for a while. That's why basically stock will be in very tight trading range the moment you see positive delta like this. On the contrary, the moment you see negative delta, look, we got negative delta here. The moment you see negative delta, this tells you basically think as if dealer has got the dealer has got the put option position, because they got put option here. They got to basically they got to think as if they have some put option here. Because they got put option here, they got to think through as the market goes higher, they got to cover. So as they cover, stock will go further high. That's why the moment you see this negative delta here, that will basically enforce the stock. If the stock is going higher, it will continue to go higher, because market maker will support the higher move here. So that's why anytime you see negative delta here, it will basically continue the trend of the stock. Stock will continue in the trend, because market maker is supporting the trend. But the moment you see positive delta here, market maker is gonna be not liking the trend. They will basically short. If the stock goes higher, they will short it. That will bring the stock back again. When the stock comes down, they will basically cover and buy the stock. So the trend continues. It will be in the tight trading range. Ping pong, dealer shorting, dealer covering. That's what goes on when there is a positive delta level here. All right, that's about positive delta. Very important to understand this positive delta, and understand the moment you see positive delta, you understand it's in a trading range, and you basically deploy such strategies. Things like selling iron condor, or selling short strangle as example, or if you're up to it, you can even sell some put options way below, or you could sell some call spread at the top, and you can make the money when there is a positive delta like this. That's a good way to make some money here. Volatility is typically low when there is a positive delta, so that's why you can employ those strategies. All right, now this is a great chart. If you have not looked at this chart in TradeTix, I recommend you to look at this chart here. This chart, basically TradeTix looks at historic data points, and they will compile this spotter. Basically, this chart, as you can hear, scatter plot. And the way to read this chart is really look at the correlation right now. We got a Greek correlation of negative 0.129, which is not too much here. Look, as you see here, right now we're in a positive delta. We're at 0.4, as you can see here. This is the positive delta. This bright orange dot here, that tells you we are here. So the moment we are here, which is around 0.4 delta, look at the fluctuations. Stock market is a little bit less volatile as you go into the positive delta. This tells you historically, when there is a 0.4 delta, which is positive delta, stock did not move much. It just moved slightly here, slightly higher, slightly lower. That tells you volatility is low when there is a positive delta. On the contrary, when the delta is around 0 or negative, the range or volatility is much more. That's how you read this chart here. That's why, because it's a little bit lower volatility, stock will not move too much. You could employ the strategies like neutral type strategies and make some money. Only thing to worry about is a little bit low volatility. So that's why you got to be slightly careful, and get out of the position once you make some money. Don't hold it for a long time, because if volatility goes higher, especially if you're if you sold some put option or spread, you can get hurt if the volatility spikes again. And this also tells you probability of Tesla stock going lower is more. Look, we got more pronounced red bars here. That tells you probability of Tesla stock coming down is more compared to Tesla stock going higher. All right, next, my favorite chart here is this chart here, gamma exposure. I love this chart. Traditix.com, I think they did a great job, coming up with this gamma exposure chart here. They are trying to neutralize or normalize this whole chart. In this case, 0.6 to negative 0.6 here. And what this tells you is really Tesla right now. We got high gamma exposure levels. Look, we got at say 170 level, very high gamma exposure. This 170 level can be a very good magnet here. 170 levels, it will pull the stock toward the 170 level because it's the biggest negative level here. At the same time, we also have one more level here, which is 172. This is this is also a significant level here. Stock can come to this level easily because it's a big negative gamma level. So these two levels are very good. That's why if you're an options trader or even a stock trader, make sure you use these levels as your support levels. As an example, if you're a put option seller, or if you want to sell some put spread below, go below 170 level, maybe go around 160 level or so and sell some put options. You can make some money that way, because this is a very good support level here. Above these levels, basically stock will be attracted to these levels. That's why if you're a put option seller, basically sell at a lower level, say 160 or so. And if you're a call option buyer or a call spread buyer, you could do things like say 165, 175 spread. You could sell that, you could buy that spread here and make some money. Given this is a very good 170 is a very good support level, you can basically trade around the 170 level. Like we talked about, 165, 175 could be a good one. Or if you're a little bit aggressive, you could even spread, you could even buy call spread around this level here, 173. You could do 170, 180. Right now stock is at 179, so you could do something along those lines. If you want to be a little more aggressive, it's a little bit hard, because the odds are stock will come down here and stay at this 170 level. That's why call option may not be a good strategy here. You'd be better served by selling some put spread or even a put option around 160 level, or you could even do a put spread here, say 160, and you could buy 150. So you could basically sell some put spread here, or even naked put if you're up to it. That could be a good way to make some money. Only issue is volatility is slightly low, but still Tesla, you can get some good premium here. All right, so with that, I will end here. Thank you very much. Happy investing and trading. Please check out this platform. I will give a link for you. So this is a great platform here. It has tons of information, and I love to use this platform here. Many other platforms will charge a lot to provide this type of information, but Traditix is very reasonable. You could get all this information for as little as around $69-70 per month. I think it will help your trading, and you can take your trading to next level. So with that, thank you very much. Happy investing and trading. Please subscribe.